Hello, everyone.
Hi all. Hi Francesco. Hi James.
Hey guys, how are you doing?
Good, thanks. And you? How are you doing, James?
I'm good.
Nice to meet you. I think you just got back from the Bitcoin conference. We saw you streaming.
Yeah, I just got back. Well, I got back on Sunday, so.
James, maybe we can start with your biggest takeaways from the conference from Nashville. I saw partially in YouTube. Also, I saw both of your panels. One, you had ETFs, a passing fund, and then you interviewed the person who is known to have orange peel, Larry Fink, correct?
That is correct. Yes, sir.
And after these two panels, and in general, after the conference, which are your main takeaways?
The main takeaways were, really one, that these firms that are launching ETFs, which is like my area of specialty, my area of coverage, they're all in on Bitcoin and really just digital assets, the ecosystem. They're not just Bitcoiners per se, but many of them are Bitcoiners first. So that they're not Bitcoin maxis, I guess is the correct term, but they are Bitcoiners. Um, the main things from the conference I took away was just the amount of political, uh, powerfully political people were there. You had over 10 people from Congress. You had RFK Jr., who is, I guess, third place in polling for the president. And then obviously you had Trump there. There was a lot of other famous people there, a lot of very wealthy individuals that I have only heard were there, so I can't really say their names, but there's people that you wouldn't expect to be Bitcoiners. Overall, it was very, obviously it was a Bitcoin conference, so you kind of have to expect it to be optimistic on Bitcoin and digital assets in general. But yeah, it was very good. I got to meet many people I've interacted with here online and on other podcasts and spaces and things like that in person. But overall, it was just a positive experience, at least for me. There were a lot of lines at the for the bathrooms, which I guess was the one thing I would complain about. But really, that only bothered me. It only got meaningful during the Trump speech. For the most part, it wasn't that bad. But I loved Nashville. Particularly thought it was a great time. But overall, it was a lot. I learned a lot. There was a lot of very impressive people there speaking. I'll just stop there before I keep rambling. But yeah, I can talk about some of my favorite parts of the panels I did, but wherever you want to go next.
Thanks for the general feedback. Maybe we can go later on the panels also because there was a discussion on next month. Firstly, I think also for the listeners, it will be great if you can make a resume of the first 6.5 months of ETF, Bitcoin Spot ETF. So when we started in January, if it is they went above, they outperform what you were thinking, or if any of the ETF underperform, or which one surprised you the most?
Yeah, so out the gate, the Bitcoin ETFs didn't do all that well the first 10 or so days, right? There was almost net outflows aside from the first day. But after that, they really started taking off. So as things got further into February, we started seeing hundreds of millions of dollars of inflows. We even had a couple $1 billion days, or at least $1 billion day in March. Then things slowed down for a while through the end of March into April and May. And then things obviously picked up again at the beginning of June. Overall, these things have taken in net inflows of over $17 billion since they launched. So I thought the number was going to be less than 20 billion for the first 12 months. My estimate was somewhere in the $15 billion range, and we're already there. We're not even 7 months in yet. Just shy of 7 months, but still, it's been an absolute smashing success for anyone who launched these ETFs. We are getting the Grayscale Mini BTC Trust to launch. I think it will launch tomorrow, and that will be a spin-off of Grayscale's GBTC, which will be interesting to watch. But overall, this has been, no matter whatever way you want to slice it, this has been an absolute smashing success. It's been the best launch in ETF history, period, stop. And even the worst performing Bitcoin ETFs, and by performing, I mean getting of flows and things like that, are still absolutely smashing successes for a normal ETF launch. So yeah, it's just been overall, it's been extremely positive as far as I'm concerned for pretty much anyone. I mean, the one with the fewest assets is Wisdom Tree's BTCW, and they still have $90 million in assets. That is a very successful first few months of launch. If you had anyone that was able to launch an ETF in the first year and get $90 million, they would be extremely happy. So these things are sitting around $60 billion in total AUM. And yeah, overall, it's been nothing but a success as far as I'm concerned, no matter how you slice it.
Great to hear from an expert, a very big expert of ETFs. I also read that IBIT took, in some days, more than 90% of all the other ETFs that were created this year. So absolutely astonished number. And going on next topic, on the first 6 months, around 80% of the inflow is coming from retail. This is a percentage that surprised you, or you were expecting that the first 6 months we will see the inflow mostly from retail?
Could you repeat that part again? What do you mean? Well,
it was coming mostly from retailing, opening a bank account, not from institutions, from pension funds or
retail.
insurance funds.
Gotcha.
Retail, yes. Sorry.
Yeah. No, that was largely expected. We did not expect to see tons of institutions and advisors come on board. That would come later. Those types of players, the insurance, the endowments, even the advisors at the big wirehouses and big platforms, they have a due diligence process. In many cases, that process is 3+ years before they'll even consider putting $1 into an ETF or a fund that does one thing or another. It does seem like that process is being expedited for Bitcoin, and it makes sense because you don't need to study a whole fund structure and understand a portfolio strategy. The history of the asset is what it is. We already have the pricing history, so theoretically it shouldn't take that 3-year number I was talking about, but it's pretty standard to have, you need a certain number of assets, you need a certain number of track record before any of those types of firms, institutions or advisors are going to buy these things. So yes, it's largely been retail. There have been some institutions involved. We have seen some pension funds jump in. I think we'll see more over the coming years. Most of the money that has come in the advisor space, the wealth management space, that has been smaller advisors that are more nimble. They don't have these restrictions on doing certain amounts of due diligence and other types of research before they're going to put their money in. So if they want to put their clients in there, they can. But it's the big platforms, the UBSs, the Morgan Stanleys, the Merrill Lynches of the world, JP Morgans of the world that have these massive wealth platforms. There are restrictions on what you can and cannot buy. You don't just launch an ETF and all of a sudden everyone can buy it for their clients. Usually there's like 3 levels, right? So the first level is, all right, nobody can buy this thing until we've done a little bit of research. And the second level is like, all right, you can only buy this after you jump through these hoops and confirm this information, or you can only buy this if the client comes to you directly and asks for you to purchase it for them. And then the final level is you can buy this and you can actually recommend it to your clients. Most of the big platforms are not at that final level yet. It's possible that will happen before the end of the year, at least for some of these huge platforms. And institutions are kind of not exactly the same, but they're in a similar boat, right? They're not, like I said, they're going to do their due diligence, they're going to do their research, and they will come in potentially at some point down the line. I mean, there's no guarantee that we're going to see this massive flood of institutions, endowments, insurance funds, you name it, flooding into Bitcoin ETFs. But if they were going to come in, it's not surprising at all that it hasn't happened yet in the first 6 to 7 months of trading.
Can I ask you, remember the first space we ran in January, and then there was also this surprise, and because it looked like the regulatory path was really difficult. And if you can expand a bit more on what were the regulatory hard points to overcome, which the ETF had to overcome to turn into reality. And also, if you can compare that to the second approval of the Ethereum ETF, which also, I remember, caught you by surprise. As me, I would never say the bet to make it happen, to have it, to see it. But if you can compare the two processes and the two sets of regulation, you think were the same 100%, or the second one was smoother because Bitcoin was the icebreaker in some way?
Yeah, so the reason we got the Bitcoin ETFs is there's a multitude, right? The first is we had a future. Right now, this is the precedent to get an ETF that holds digital assets launched. That's where I'll start. So the precedent right now is you need a futures market that is regulated by the CFTC or a federal regulator in the United States, that the SEC feels comfortable that they can get enough surveillance to look for fraud and manipulation. And then also, you need a futures ETF, so an ETF that tracks those futures. Theoretically, maybe that's not possible, but that's the precedent that has been set. And then after that has traded, and after there's been enough trading volume and open interest and history on the futures market, and we know that it works smoothly, then the SEC theoretically could approve the spot products. The reason we really got the spot products at the end of the day is because a federal court decided that the SEC was being, quote, arbitrary and capricious. So you can thank Grayscale. You can thank all the work that's gone into it over the past 10 plus years of different people knocking down barriers that the SEC has set up and answering questions the SEC wanted solved. So that was the process for the Bitcoin ETF. We went to 90% odds of approval in October. That's when we said this thing was going to happen. The SEC basically changed their tune, started interacting on some other filings they had never done before. So it was a change of direction from anything they've ever done in the past for these big digital asset ETFs. For Ethereum, initially after the Bitcoin ETFs launched on January 11th, our thinking was that these Ethereum ETFs, they have a 70% chance of approval because they have all the same things that the Bitcoin ETFs have. And there's no reason or no way the SEC is going to be able to deny these without having to go to court. But then the SEC spent the next 4 months not interacting with issuers, not giving them feedback, not doing anything that would indicate they're going to approve these things. If you talk to any of the issuers, you name it, Blackrock, Fidelity, Invesco, Bitwise, none of them expected these things to launch. We all thought there was a good chance of them launching in January for the most part. Some of us more positive than others. But by the time we got to early May, late April, it was just like, okay, I guess this isn't happening. Even the issuers told their employees to stop working on anything Ethereum ETF related because it was a waste of time, and we'll come back to it again in like a few months down the line. But there's two trains of thought here, right? The first is there's two things at play. One is I think the SEC was trying. There was all these lawsuits out there. They were talking with Consensus. They were going after a bunch of different firms with Wells notices, which basically indicate their intention to sue in relation to Ethereum, particularly its staking. They went after the Ethereum Foundation a little bit. So it looked like the SEC was looking for a way to deny the Ethereum ETFs. It seemed like their plan all along was to deny the Ethereum ETFs. I think one, they realized they were probably if they denied, they would likely lose a lawsuit because they weren't going to be able to deny the Ethereum ETFs. The other part is this all started happening in May. Around May 10th, I don't know the exact date, Donald Trump held like an NFT dinner at Mar-a-Lago. And that was where he first said that if you like Bitcoin and crypto, I'm going to be the president for you, essentially. Then we had votes on different bills in Congress and the House, Fit 21, which is like a crypto market structure bill. The repeal of SoB020 which is the thing that basically prevents banks from being able to hold and custody Bitcoin for their clients. And we saw a bunch of Democrats sway there, the likes of Nancy Pelosi, who was the speaker on the Democratic side in the House. You had Chuck Schumer, the leader of the Democratic Party in the Senate, and a bunch of other congressmen and women from the Democrat side joined the Republicans in voting to repeal SoB020. We also had a whole bunch that voted for FIT21. So all of this was political machinations in the back end that it's likely that the political movements that happened in May, combined with the fact that the SEC thought they were not going to be able to approve these Ethereum ETFs, caused a last minute pivot. So the final deadline for the approval of Ethereum ETFs was a Thursday. On Monday, late morning, they started calling issuers and told them they were going to approve, which is completely abnormal. They don't usually do that. There's usually a lot of conversation that happens beforehand, and everyone was caught off guard. And that's why once we got the approvals in late May, it still took, 2.5 months before these things launched, but they only launched last week. So it had to do with political nature. It likely also had to do with the fact that they were going to possibly and likely lose another federal circuit court case that was not going to look good for Gensler and the Democrats and the SEC in general. So yeah, that's the background on how we view it.
Got it. And do you think we're going to see other assets being made ETF of for the same reason or not?
Good question. So Van Eck, who has launched now Ethereum and Bitcoin ETFs alongside 21 Shares, who partner with ARK in the Bitcoin ETF, they filed for a Solana ETF a couple months back. They and CBOE just did a filing for them, so there's 2 filings that need to get these things approved. The final deadline for those applications is the end of March of 2025. I think the odds that those things get approved for listing by the end of March in 2025 are somewhat unlikely, rather unlikely, particularly if we don't get. It honestly, a lot of this will come down to what happens in the election. Even still, I think the odds of getting the Solana ETFs approved by their March deadline are better if Trump wins. That said, they are not super strong because a lot of things need to happen. The SEC is actively in litigation calling Solana a security. There's a lot of competition between the CFTC and the SEC, so nobody knows who has the true jurisdiction. Nobody knows the rules on what makes a security and what makes a commodity. So potentially you might need a market structure bill to satisfy what's going on. That said, recently this week, even there's already been talk of the SEC is now taking out some of the claims of different things being securities in their lawsuits, which could be positive for this. But right now, I talked about the precedent for what we needed to get a Bitcoin ETF and Ethereum ETF. That precedent, if they follow it, there's no way that we can get a Solana ETF because there is no regulated futures market. There is no regulated market, even spot market, for the SEC to surveil. There are ways around it. You can do surveillance sharing agreements with the likes of Coinbase and Binance and Kraken, and theoretically that would solve the problems. There is no law on the books that right now that would say you cannot have a Solana ETF. It's just the way that the SEC has handled things in the past. It dictates that they shouldn't approve these things. So we'll see if it happens. Who knows? It's rather unlikely. But yeah.
And let's say that also if it happens, do you see for institutional investor and retails similar interest for Ethereum on the rest versus Bitcoin? We see Ethereum now is a 35% market cap of Bitcoin. Do you see that could be also the same for institutional, or they are more interested in Bitcoin versus Ethereum?
Yeah, so our expectations were the numbers that we have out there were we thought that the Ethereum ETFs would do 15 to 25% of the volume and flows that the Bitcoin ETFs did over the first 6 months. So far, the flows actually fall right in that range. It kind of makes sense. That's where they're trading in that sort of 15 to 25% range. And we discounted that for a multitude of reasons. One, you lose utility no matter what you do when you put a digital asset into an ETF wrapper, but there's more utility that's lost when you take an Ethereum and put it into an ETF wrapper because a lot of people like to use it to trade, mint different things, mint coins, NFTs, you name it. Whether or not you like that or not, it doesn't matter because that's kind of the way that Ethereum is used. The other problem is these ETFs do not allow staking. So you're giving up yield in a way. If you keep it in the native blockchain, you can actually use yield. So you're not getting that. So for all those reasons, we were discounting it. Also, there's just less interest from the clients we're talking to, advisors, institutions. There just isn't as many questions that we're getting about Ethereum. We just didn't see the same level of interest and demand for Ethereum that we saw for Bitcoin. And honestly, that's showing up in flows. So far, we have net outflows for the Ethereum ETFs in their first 5 or so days of trading. That could turn around pretty quickly. Like I said, the Bitcoin ETFs, even in their first few days of trading, most of those days were outflow days because money was pouring out of GBTC. In this case, money is pouring out of ETH. Most of that money that comes out of ETH is coming back into other products, but not all of it. So it's still very early to know how it's going to play out. But yeah, it's kind of somewhat what we expected.
If I have to guess, give you my idea is that it's very different for Bitcoin, and it's not sell the news, and I think we will not recover. But I'll tell you why. I mean, if you remember before of Bitcoin, the approval, there was a pump. 2-3 months started before the Bitcoin approval. We didn't have that on the tape. Okay, it was done last minute, but even a few days before. There was some pump, but not that exaggerate, and it immediately dumped, and then more prolonged the Bitcoin. So we didn't see that strength, that demand as an underlying force in the market, in my opinion. Then could recover, but for sure we can see already from the charts what you said, that the demand for Bitcoin is keeping consistently bigger than the Ethereum one.
Yeah, I would say that's broadly accurate. And also, many people like to talk about the Bitcoin ETFs and say like they haven't done much to drive the price. If this much money was coming in, why isn't the price going crazy? And people got to realize the market started pricing the fact that we were going to get an ETF when Bitcoin was priced like around $20,000, right? So I mean, we like I said, we started putting this at 90% odds back in October, and even before that, our odds were at 70% in early September. So the odds of this happening were, again, when this thing was trading under around $25,000, and even before that. So the price from there to 40 when they launched, a lot of that run up was due to people's anticipation of the ETFs coming to market. And again, as you hinted at, and as you said blatantly, like we didn't have that same sort of run up with ETH. We did a little bit initially. People started buying ETH once the Bitcoin ETFs were officially approved, expecting the Ethereum to get approved. But then things fell apart when everyone, including us, we were probably a proponent of that narrative. But I still stand by it as being correct that the SEC was planning to deny the Ethereum ETFs, or was at least looking very hard at ways to deny, for sure.
And that's way worse for Ethereum. I mean, if now the king is naked, if it doesn't work on the ETF, that's bad news, really bad news. But we see. Let's change the topic because I see there are some Ethereum people in this room as well. I don't want. Good luck.
Okay, we can also move for the next outlook for the next 6 months. James, you said institution will come likely or this year or beginning of next year. And actually, we have seen some big announcement in the last days. For example, the CEO of JP Morgan said Bitcoin could have of Goldman Sachs, sorry, could be a good store of value. Then we have the chief investment officer of Blackrock saying there will be a modeling portfolio from big institutions like JP Morgan, Goldman Sachs, and Wells Fargo at the end later this year. Firstly, when do you think, in which quarter do you see we will see the first big announcement of a company, as you said, a big investment company reaching the last level, recommending, let's say, a 1, 2, or 3% allocation? And for you, who will be? We know that all the forecasts are wrong, but if you have to bet.
Yeah, I mean, if I had a dollar for every time that I saw a news article about how Morgan Stanley or somebody out there was close to approving these things for their advisors to recommend them, I'd have a lot of money. I don't know. I probably wager that it would happen sometime in the fourth quarter of this year. I think it will definitely happen for one of these bigger banks in 2025 at some point. That said, it's not going to be the banks recommending these things at a 1, 2, or 3% allocation. It's just going to be that the advisors that use those platforms, wirehouses, what have you, they're going to be allowed to recommend it. So only if you have a specific advisor or broker, what have you, it's just that if they like Bitcoin or they think it would fit in a model portfolio, they could recommend it to their clients. But it's not like those actual banks are going to specifically say, we recommend that you put Bitcoin in a portfolio. The other side of this is model portfolios, which you were also kind of talking about, and which the CIO of Blackrock was talking about. They're basically what they are. They're these, pretty much any institution has them. Some have billions and billions of dollars that track them. There are funds that do this. And what they will do is here's a portfolio. We recommend holding these 14 ETFs or funds or whatever in this sort of allocation mix of this number. And then an advisor can choose to follow those trade ideas that come out whenever they come out and track that underlying portfolio. There are automation tools that allow you and will automatically trade for you, so you track those portfolios. We haven't seen Bitcoin really be added to those in a big way. There are some smaller shops and smaller model portfolios that are doing it. As far as when the real big model portfolios would consider doing that, we're probably a relatively long way off on that, but I don't know. And then I'm not going to guess at who will be first. I have no idea. There's a lot of them out there. There's trillions of dollars at these platforms, and there are undoubtedly advisors that use those platforms as their back end and middle office and things like that do want to be able to recommend this to clients that haven't. I just have no concept of how many of those people there are or which ones will be first. I don't have any insight or knowledge into the conversation that those platforms, those due diligence teams are having with the advisors or with the ETF issuers. I know for a fact there are conversations happening. I've talked to multiple issuers who are having conversations with those due diligence teams. I have no concept of exactly who's moving the fastest, but I do think it will happen within the next 6 to 12 months for sure. There will be some big platforms that come online. That would be my guess.
Okay. Yes. Thanks for the update on this. I think also in the Bitcoin world, mostly the agreement or the alignment is as you said, in the next 6 or 12 months. So, or second half of 2024 or first half of 2025. Also, because being an ETF, for sure they have to do the due diligence on Bitcoin, but the asset is an ETF, so it's super regulated. It's only about the performance and the history of Bitcoin, maybe a bit of history of ETF, 3 or 6 months. But how to buy the ETF, it should be straightforward. Do you think also they are waiting, these institutions, because they don't want, no one wants to be the first big institution, or let's say between JP Morgan, Wells Fargo, and Morgan Stanley, they have, Goldman Sachs, they have around 20,000 financial advisors. And at the moment, a financial advisor could risk the job if they offer Bitcoin or too much allocation Bitcoin, then Bitcoin goes to zero. But once we have maybe the first or second one or two big institutions, then there is not anymore risking on the job, and maybe they will be forced. It will be accelerated, this process. So do you think once we have one or two announcements, all the other will follow shortly, or we have to wait?
My instinct on that is probably not exactly the case. I don't think like they're waiting for somebody else to move. Maybe if we had a bunch of small issuers that were launching these ETFs, but I mean, we have the likes of BlackRock and Fidelity. They're like the Invesco, some of the biggest names in finance. Van Eck and Wisdom Tree and some of these other issuers have been doing this a long time. And then there's even the newer shops at Bitwise and Grayscale, who specialize in more digital assets type stuff. You have Franklin, which is a massive multi-trillion-dollar asset manager. These are not like minor shops just trying to launch obscure ETFs, right? So I think they are going to do their due diligence. They're going to take their time and do what they have to do before they feel comfortable adding it to their platforms. And there's no guarantee that they will add these things to every one of these platforms. It's just that I do think for sure that some of them will. at some point over the next 6 to 12 months. But I don't think there's going to be any sort of like dominoes falling. I mean, theoretically, they all are doing a similar process, going through the due diligence process. So it could all happen somewhat around the same time. But I don't think you're going to have someone go, oh, this platform approved them. We need to move up and hurry up and do it as quickly as possible. Maybe that's possible, so they don't lose advisors. But we already have plenty of advisor networks, just not ones that are of the size and ilk that we're talking about. But there's plenty of advisors that have already done this. They've already started buying these ETFs for their clients. We've had pension funds do it. So it's not like this is like completely brand new and no one has done anything here. It's probably just this stuff takes time, and it's going to take more time before they're officially comfortable.
I have a question about the misconceptions people have about the Bitcoin ETF. Especially the Bitcoin users who already hold their own keys are afraid of handing over the security of the asset to another issuer like ETF. But if you can explain a bit more how this certainty of ownership of the asset is issued to the user, because what do we have a look at? What enforces this correspondence one-to-one of the ETF to the actual underlying asset? Is a rule of law, or there is some internal auditing, and just very also broadly how it works, because not just a few ETF have a proof of funds, and also how it works, and also if you wish that all of these issuers is going to release a proof of fund or even a proof of transfer could be better.
Yeah, I mean, we do have some issuers that have done proof of reserves or actually share their addresses. I know Bitwise has shared their addresses publicly. Others have done different proofs of reserves. I do think that would be, more keeping with the ethos of Bitcoin and digital assets more broadly, free, open transparency. That said, the ETF world, particularly in the US, there's plenty of accounting and double checking and triple checking of processes. Also, there is a lot. It's the U.S. rule of law. So there's trust law involved here. So these ETFs are set up as trust. So anyone who owns shares of these ETFs de facto have underlying ownership of the underlying assets. So when you're buying these ETFs, you own an underlying portion of the Bitcoin that they hold. So that's just U.S. law, essentially. And they are bankruptcy remote. So the trust owns the Bitcoin. It's not like BlackRock owns the Bitcoin or Fidelity owns the Bitcoin. The trust owns the Bitcoin, and BlackRock and Fidelity just run the trust. So even if those firms went bankrupt, you would still have ownership of the underlying Bitcoin. That is not to say this is the same thing as owning your own keys for owning Bitcoin, right? Like this, not your keys, not your coins, what have you. But for plenty of people, they will give up the sanctity of owning your own keys and coins for the ease of use of clicking a button, or maybe you have money on a platform that you don't want to move or theoretically can't move because it's in a tax advantage account. There's many reasons, particularly if you're an advisor. It's way easier to just use an ETF if you're managing money for your clients because it's already on the traditional financial rails. So there's a lot of pros that go along with the ETFs, but there are obvious cons in the fact that you are basically taking a step outside of the decentralized finance rails that Bitcoin is trying to build and is trying to disrupt.
So is auditing not a common practice, not allowed in any ETF?
What was that question? Sorry.
Auditing. Is there any procedure auditing on the ETFs?
Yeah. The ETFs are always audited. Any ETF in the U.S. is going to have regular audits, semi-annual and annual audits. And there's so many different people involved in this process. Right? You have the issuers, you have the Bitcoin custodians, you have fund administrators, you have a cash custodian. So there's a lot of different people that are involved in looking at this stuff at many different firms. So I mean, it's not to say nothing bad could ever happen, but there are a lot of checks and balances in place that are in place the same way they are for traditional ETFs in the U.S., which have about $10 trillion in assets that are stored. They're under these 1940 Act, 1933 Act, and different legal rules that basically are set up to protect end investors, not necessarily from the investments, but to protect them from malfeasance on the parts of other people involved in the process.
I see. So it's basically the trust fund which gives trust. I mean, if they fail, then you have a trust fund, and the trust fund cannot cheat, and that's what gives certainty.
Theoretically, yes, that should not be able to happen.
Thank you.
Another topic on the narrative of the Bitcoin ETF in the Bitcoin world. So we have seen in the last 7 months also the opinion on Bitcoin ETFs shifted. 7 months ago, many of the hardcore Bitcoin, the one not your keys, not your coins, they were saying, no, you should not buy people should not buy the ETF. It's a bad product. Not your keys, not your coin. Not only meaning you need to store, you need to have self custody, but these are bad products. Now the narrative shifted, at least on to many Bitcoiners. They will not maybe buy themselves Bitcoin ETF, but they're not products for Bitcoin Core Maxi, but they are products for many people who want to, like we want to onboard for Bitcoin adoption. And in the conference, have you noticed which was the reaction of Bitcoiners you see at the conference? Like more open to Bitcoin ETF, or there were still some saying, no, these are bad products, people should not buy this ETF, they should go directly to self-custody?
Yeah, I mean, it's definitely a bit of both. I mean, I was up on stage with Jan Van Eck, the CEO of Van Eck, Matt Hogan, the CIO at Bitwise, and Robbie Mitchnick, the head of digital assets at Blackrock. And right after a guy went on stage who is a Bitcoin maxi that basically said, screw BlackRock, screw the ETFs, all those things. And I kind of get it. In a way, there is a little bit of going against the ethos of what Bitcoin was built to do. But these issuers, what they're trying to do is be able to get people access to this space. And honestly, like I said, I've talked to a lot of Bitcoiners who own Bitcoin directly. They have their own keys. They maintain it, but they have other accounts where they want to have exposure to Bitcoin in those accounts as well. And these ETFs offer that. And like I said, if you have other people managing your money, particularly an advisor, it makes sense that they would want to use an ETF to get exposure. But there are definitely people who are against the ETFs. But I think they are few and far between. I think they are more the extreme Bitcoin maximalist type world, and I completely understand that. A lot of those people are the ones carrying the torches in the 20 teens before we got to where we are now. But as far as I'm concerned, it's kind of all part of the game theory of Bitcoin, in the sense that everyone eventually, in many ways, is going to have to take this more seriously and potentially get on board, and people will get on board however they want. I mean, really, all at the end of the day, this is just another option or choice for people. And the one thing I always go back to is, like, I'm never going to be able to get my father to do it, to go on his own and set up a Bitcoin wallet and get his hands on some Bitcoin and maintain it. Like, I theoretically could do it for him and handhold him, but at the end of the day, it's just way easier to just tell him, yeah, you can just go buy an ETF to get exposure to this. Hopefully it'll be easier in the coming days. I know there's a lot of work, but it's just not that easy for people who are not tech savvy or very online in many ways. So there's a lot of reasons why people would hold the ETFs. The one thing I would just go back is it's a choice. It's not changing anything about Bitcoin itself. And I think that's what most people wrap their heads around and completely get behind at the conference. I would say also, I think that there's this view of the Bitcoin conference that everyone there is a Bitcoin maxi and hates anything else. There were many people there that are not necessarily Bitcoin maxis. I would say the vast majority of people there talking tend to be Bitcoin first people, but not necessarily maxis. And for the most part, I never interacted with anybody, or I didn't see any nastiness that you tend to see online. People in person tend to be much kinder around their interactions.
Good to hear, and I agree. Also, there were 20,000 people in the conference, so likely it cannot be only a Bitcoin Maxi. And I think also on this topic, I think Dan Held wrote a great post in Nix. He wrote like. I also got the point from Bitcoin Maxi that saying, okay, these are, but you should own your keys, but it's not for all, as you said. And also, I will add also for institutions, pension funds, insurance funds. Technically, they if we expect them hold their keys, we will wait maybe 20 years. And he wrote, Dan Held wrote, if you expect a Bitcoin adoption worldwide as a global value without the involvement of politics and the financial world, then you should have different opinion. Like it cannot happen a Bitcoin adoption without the financial world and the politician um, involved in Bitcoin. And actually, it's also a victory of Bitcoin, as you said. Nothing changed. There is one block every 10 minutes. The halvings every 4 years. Is the halving? Bitcoin is going on as it always. So it's a victory of Bitcoin. Were you impressed by Vanek? It was the CEO. I think he said that he owns 30% of his net portfolio in Bitcoin. I think
Yeah, I would also. Yeah. So I would also add on what you were talking about, the institutions and not holding their own keys. Part of that is by design. You want to offload that risk. You're not going to be an institution and have like 2 or 3 guys have a multi-sig wallet controlling billions of dollars. They'd much rather go through the legal process. There's a reason that you want to like hand that off. For an individual, it's a completely different situation. But for an institution, there's a lot of benefits to having it in an ETF. They'll gladly pay up for somebody else to manage this and take on that risk. And if something goes wrong, they can blame them, right? So there's an agency benefit to having that. Your question on Jan Van Eck, that was the number one thing I took away. Jan Van Eck was on stage and he was talking about how a lot of people involved in these Bitcoin ETFs and just Bitcoin in general say that, yeah, we recommend 3 to 5% of your portfolio, yada, yada, yada. And then he was like, but at the end of the day, you ask them how much they own and everyone is way over that 3 to 5% number. And then he said, I'm over that 3 to 5% number. So then I asked him, I was like, okay, you're going here. Are you going to tell us how much of your personal portfolio, investment portfolio is in Bitcoin? He said, yes, well over 30%. So yeah, he also said Bitcoin was in his blood. I did not think he was going to actually give us a number. I was shocked a little bit on stage, but he did give us a number and the crowd cheered pretty loudly at that one. But yeah, Jan Van Eck, the CEO of Van Eck, he was very early on Bitcoin. He was very positive on Bitcoin going all the way back to 2017, 2016 time range. So yeah, that was the number one thing that jumped out to me.
Yeah, that's remarkable. I mean, this shows that it's not just another ETF. It's not just another product. We have the CEO of Blackrock and now the one of Van Eck, like being very vocal about it. And that's not normal. How many ETFs do they launch through the year? Some 2, 3 about oils, 2, 3 on gold. But they don't do this kind of advertisement with this emphasis. That's really a different kind of product.
Yeah, exactly. I mean, that's the other thing I took away. Like you talk to these people, everyone's like, oh, they're just ETFs. They're in it to make money. Yeah, they're in it to make money, but they also like believe in this. Larry Fink could easily, instead of going out there and pitching Bitcoin as a store of value and say it's a hedge against currency debasement, he could easily just answer those questions online and just say, yeah, our clients are interested. Our clients at it. We do what our clients want. We provide value where our clients want us to provide value. And there's demand for it, so we're launching it. He doesn't have to preach all the reasons why this should be, why he believes in it. So he obviously, like I hear a lot of people saying he's just saying it because he can make money off of it, and I think that's just not true for most of these ETF issuers. They believe in it specifically, or they wouldn't be doing this.
Yes, because they keep doing even after the very good result. They Bitcoin changes them as well. They keep also learning because at the end of the day, they could be also financial professional, but they come they came in the last 2 years. So it's a long process, and then one day they can think about Bitcoin. Maybe I'm kidding. I don't know, but we see. Ideally, talking about listening to the experts in this world, the US dollar and Bitcoin are not compatible, if we want to be fair. but in this phase they are. So they have still room and time to decide. Maybe one day there will be a Bitcoin pure ETF accounted in Bitcoin. I don't know how, but that could happen.
Talking also about the other speeches in the Bitcoin conference, I think you listened to both Kennedy Jr. and Trump speeches. Which is your takeaway?
Yeah, I mean, I actually had dinner with the RFK. I mean, my takeaway, I didn't understand. People were like really upset with Trump's speech, which didn't make sense to me. He basically, you know, said everything that if you're a Bitcoiner, you would wanted to hear. I don't know how much he fully actually understands it. He obviously has some very smart people and savvy people who understand what the crowd wanted to hear for him to say it. I think most of the people that were upset in that crowd, particularly people online that I saw, like have never seen a Trump speech because it was pretty standard Trump speech. That's why he always does things. He rambles on, hits a point, rambles on other stuff, complains about the Democrats, complains about Biden, hits a point, and does stuff like that's just the way that Trump is with his speeches. But he pretty much did everything that a Bitcoiner would hope that a president would say. And honestly, if you had told me a year to maybe even just a year ago that was going to happen, I'm not sure I would have believed you that a leading presidential candidate would say something like that. As far as RFK goes, he basically said all of the same things that Trump did, but even more. He was more aggressive about creating a Federal Reserve or stockpile of Bitcoin than Trump was. But the other thing I will say about RFK is he definitely knows a lot more about Bitcoin and DeFi and digital assets in general than Trump. So Trump is definitely not as in the weeds or as knowledgeable on this topic as RFK, but we've never really had a third-party candidate win here in the U.S. But yeah, I would say they were both extremely pro Bitcoin in their speeches, and it's kind of amazing that two of the top three presidential candidates were there to speak at a Bitcoin conference. It's still borderline unbelievable. If you told people that was going to happen a couple of years ago, I'm not sure that they would believe you. It would happen so soon.
Definitely, especially in Q4 2022, when there was also FTX collapse, Bitcoin went to 16K. ECB said it's embarked on a road to irrelevance. And we are not only seeing the Trump and Kennedy Jr., but it looks like also the Democrats, they're looking for a new reset. There were articles in Financial Times saying Kamala Harris' team is looking for a new reset with the crypto world because Biden was too much against. So also the move from Trump is also triggering a different attitude from the Democrats. Did you see this as well?
Yeah, I mean, that's definitely happening. It remains to be seen. Right now, it's just words from the Democrats. At the end of the day, I don't know how much it is simply what Trump is doing as much as it is seeing how much money is coming from the space and the voting power that the people who care about Bitcoin, particularly in swing states, that could impact this election. So I think they're kind of being forced onto their back foot a little bit. Overall, my view is like, I know some people are very upset with the Dems and they just want the Republicans to win and what have you. My view is this shouldn't be a partisan issue overall. I do get people who are upset with the Dems in this space, but I think the more bipartisan it can be, the better. But yeah, I mean, I'm not a political analyst, and I'm not going to get too political. It's just kind of the way it is, and I think if we'll see what happens over the coming months, right before the election, if the Democrats actually make any moves that show them to be serious. I will say they did approve the Ethereum ETFs, which is somewhat indicative of the fact that they are not as hardlined against it as some people thought.
Yes, I wanted also to say the same. This example, one of the reasons was they wanted to change a shift on their attitude. I also agree. It should not be. It should be a bipartisan topic. Like Bitcoin should be for everyone, and it would be a pity if it is identified only with one portion of the electorate, so of people who vote. So it should be for all. Obviously, also from how so conservative and right, I think with less spending is this part is more towards Austrian School of Economics and Bitcoin having limited supply. But Bitcoin will benefit everyone, so it should be bipartisan. One of the last questions I have is: do you foresee if we reach 100K, maybe will happen this year or beginning of next year, we will see an acceleration of adoption also in terms of ETFs? Some people are saying once we reach 100K, many will sell at that level. Maybe yes, but I think the interest will be much more. So the order of magnitude of new demand will be higher, and not only for the ETF as well, from individuals, but also for pension funds, insurance funds. Could be this an accelerator for the inflow?
Yeah, I mean, I'm not allowed to talk about price predictions. I honestly, you wouldn't want to listen to my price predictions. I don't really have a strong view on what that would do to demand. I think overall, the way that ETF tend to work is they tend to see flows over time, and as their assets grow up steadily over time. So, granted, this has been kind of chunky for the first few months for the Bitcoin ETFs, but as people increase allocations and add allocations to the portfolios, we'll see what happens. But I really don't have a strong view on like exactly what's going to happen. That said, obviously, we did see a big price collapse into the 50,000 number range, and the Bitcoin ETFs bought a ton of Bitcoin. There was a lot of inflows that came on the back of that drop. So who knows exactly what's going to happen? It seems that flows can come in whether or not no matter what the price is doing, people are buying the dip and they're also buying into rallies. Right now, it just seems for the most part, over time, money has just been coming into the space. There are spouts of outflows, but over time, money is generally just coming in.
Yeah, it's rhyming like the gold ETF, no? It's looking
yes,
like
exactly.
But even more because gold is very known. Bitcoin is still mostly unknown from many. So we have also this asymmetric information. And James, you see, now we had 16 billion in the first 7 months. If we start to have big institutions, let's say in December 2024, in 1 year, we could also in the following 12 months, we could even reach maybe 50 or even 100 billions of inflow theoretically, if we have so many big institutions. Do you think this is a possible number between 50 and 100 billion in 12 months?
That's way higher than what we think, but we were wrong in the first 6 months. That said, I will say, you talk about gold ETFs. These ETFs already have $60 billion in the US. Gold ETFs have about 100 billion. So they're 60% of the way. They have less than 100 billion. So they're more than 60% of the way to where gold ETFs have gotten. So, I mean, on the current trajectory and trend, it seems like the Bitcoin ETFs will pass the gold ETFs in assets at some point in the next few years. But who knows? That's just projecting things out, and past performance isn't usually necessarily indicative of what's going to happen going forward.
Thanks, Francesco. I think also we are approaching the last 5 minutes. Do you have any other question for James before we go to the wrap up?
no, I just give you my outlook on the ETFs. I think they are part of the market now. Before we were thinking it could dominate the market, and then there was a big demand in the beginning. Now there still is. It's still increasing, but it is just a piece of the big the pie. So we will increase. I don't know, but I think what is going to increase are the volumes. That's for sure, and that's very good for the price. So we cannot foresee, but we have as an indication the volumes which are going to increase and that will benefit the price 100%. No, I don't have any questions. It was a pleasure talking to you. Thank you so much, and see you next time.
Thanks, Francesco. James, you have any last words for the listeners?
No, I mean, I just say these things have been a smashing success. I think we're over 2025. We're likely to see other digital assets launch, which I'm not sure how you guys feel about that. Digital assets ETFs, I mean, but Bitcoin seems to be the thing that most people seem to care about, particularly in the traditional financial world. The digital gold, digital store of value aspect is what people seem to be clinging onto in my world. We're still going to be watching. Obviously, I'm paying close attention, and I think there's a lot of potential positive catalysts coming throughout the rest of the year. And it's fascinating that this has become something that's a part of the 2024 U.S. presidential election to the extent that it has.
Thanks a lot for your last thoughts. I also, on the other digital asset, I think most of Bitcoiners believe maybe Ethereum will have some success, but not proportion and not correlated to, not this, in the same magnitude of Bitcoin, less than the 30%. And also, as other people said, other experts, there is very little interest for anything else that is not Bitcoin or not Ethereum, but we will see. I totally agree. Next 6 months, 6 to 12 months should be great for Bitcoin, with the big institutions having finished the due diligence, politics interested in Bitcoin. I will also add, once it's reached certain level, many Bitcoin skeptics will stop saying things against Bitcoin, and many people who are now Bitcoin neutrals, they are just looking at Bitcoin, will become more interested in Bitcoin and will get educated by Bitcoiners or by experts like you on Bitcoin ETF. So thanks a lot for your analysis and your thoughts. Maybe we can have a next space in 6 or 9 months, and we will see how much will be the inflow in the first 12, 15 months. Thanks all.
Yeah.
And thanks, James. And
Thank
have a
you,
nice
Francesco.
day.
Thank you, Alessandro. Have a good rest of your day.
Thanks, and have a nice day to all the listeners. See you in one of the next spaces. Next one is next Tuesday with Daniel Button. Bye-bye.